Now, we're very fortunate in our next presentation to look at the ATO guidance and the way forward. The ATO, of course, as we know, is involved in policy development, but the ATO's role is very much focused on the law as it operates, and so we're very privileged to have an outstanding ATO speaker, Peter Walmsley, the Deputy Chief Tax Counsel for the Northern region in the Australian Tax Office. His role as Deputy Chief Tax Counsel involves him chairing the Public Rulings Panel, the General Anti-Avoidance Panel, and providing a lot of advice on tax policy matters. We're also going to be privileged to have Ken Spence with us as a commentator. Ken is the Director now of Greenwoods and Freehills, and he will no doubt be covering not only the ATO guidance but also aspects of the way forward more broadly in areas that involve the Treasury. So without further ado, I'll introduce Peter Walmsley.
Actually, I've abdicated as chairman of the half-row panel, glad to say. In front of you, you've got this document. It's a draft of something we propose to put on the website. I understand that it'll go up in a few days. We're still seeking feedback on it, so it'll probably change a little bit. And you can certainly offer some feedback now if you want to. What I want to get out of this session are some difficult questions that I can't answer so that we can go away and deal with them. I propose to speak briefly and leave you time to put questions to us, because I can see that the implementation of these measures could be difficult. Now, my brief address to you will include a short description of where the ATO actually stands at the moment. I'd like to have a horde of minions out there just waiting for the command to go do stuff, but they don't exist, unfortunately. So we've only got a limited number of people who are across the problems here, and they're going to have to be utilised fairly carefully. First priority is to assist Treasury to get the law right and to deal with any minor technical matters, hopefully minor technical matters that arise. Our second is to eliminate as quickly as possible the stock of objections, private rulings and amendment requests that we have on hand. They're not numerous, but some of them are difficult, and not necessarily difficult because they raise difficult questions of law. They have valuation problems which need to be sorted through, but we want to get rid of those as quickly as possible. We'll be addressing, because they're fairly limited class of people we're talking about here, I'm not going to go into that in great detail, as we shall be contacting everyone who's affected. And then, of course, the next priority will be to deal with what I imagine is of greatest interest here, which is tax returns and fresh amendment requests and so forth. And then finally, to think about what our position will be with respect to a compliance program, which, of course, is not really in my area. But now, the basis of our approach is set out in a practice statement. We don't have law. These measures are not law. The law is the law. Okay, so the first thing that needs to be understood is that everyone is entitled to rely on the law as it now stands until it's altered. But our administrative practice recognises the fact that this is often inconvenient when people know that it will change. And so you are given, in effect, the best of both worlds. You can also anticipate the new law. The ATO approach to it essentially is that it will be forgiving of any kind of mistake provided that it is corrected promptly. So in other words, if a taxpayer does anticipate what the law will be and is wrong about how it eventually turns out, then there won't be any punishment provided that the error is corrected. So now we don't have a preferred approach. In other words, we don't actually ask you either to guess what the new law would be, which I think would be unreasonable, nor do we in any way seek to insist on you not guessing what it would be. So it's very much over to you to deal with the pros and cons. What we do ask, of course, is that once it has become clear what the new law is, that everybody take prompt steps to bring whatever it is that they've done into alignment with it. So that's the guiding principle, which is a relatively simple guiding principle, and I hope you will all understand it. Now, bearing that in mind, if you just look at the document in front of you, you'll see this set out with what I hope is some reasonable degree of clarity. So on page 2, you'll see the taxpayers who lodge on time in accordance with the existing law, and later debit amendments are needed because of the effect of retrospective legislative changes, then no tax shortfall penalties will apply, and any interest attributable to the shortfall will be remitted up to the date of enactment of the new legislative measures. And it will also be remitted for those who actively seek to appropriately amend their returns within a reasonable time after the enactment of the new law. But if you, just like doggo, in the hope that we won't find you, then of course that administrative procedure won't apply. Although some people may have statutory protection, to the extent that they don't have statutory protection, the Commissioner would of course seek to do the usual. Now, if you anticipate an announced change to the law, and as a result you see that you need to revise it, and then the same proposition applies. There are no tax shortfall penalties, and the existence of the announcement is special circumstances for remission, and any interest will be remitted to the base interest rate up to the date of enactment of the new legislative measure. Okay? And those who actively seek to appropriately amend their returns within a reasonable time will have it remitted to nil. Same theme is followed for the pre-12 2010, once the new law is enacted. Those whose claims are in accordance with the new law don't need to do anything. Those who've underclaimed, and we don't expect a lot of people to be in that category, but you never know, can seek amendments, and those who've overclaimed will need to seek amendments. You'll note the amendment periods there, which I think have already been explained. I'm not going to read through the table. And again, the same process is followed for the prospective period. Okay? In regards to the law, when it is enacted, we will of course attempt to provide our position on it as quickly as possible. In relation to the former 701.55.6, you get some flavour of what their position will be on the basis of some old rulings. They in some cases inapplicable because they dealt with consumables, but that will be some sort of interim hint. But we will be replacing those. They were never actually issued, they were only issued in draft. We'll be attempting to replace those as quickly as possible. That will probably take priority over the statements for the future, simply because I think the immediate pressure on the administration will be for clarity in respect of the past rather than the immediate future. Those, of course, who are going into significant acquisitions will be able to seek private ruling requests, and in fact I suspect that some formulation of thoughts on the part of both taxpayers and ATOs will arise initially in the context of actual fact sets of acquisitions, and that's probably a better basis on which to generalise, to the extent that one can generalise, because as speakers have already noted, the capital revenue distinction is not the sort of thing that lends itself to simple explanations, and indeed, in a case I can never remember the name of, was famously compared to a coin toss. If anyone can remind me of that case, I'd be grateful to them. So look, that is, in very short summary, the ATO position. Now, I can go on and describe administrative matters in more detail, but I'd actually really, see, I've already used up 10 minutes just saying that, ask you if you have particular questions that you would wish to ask us right now. Please.
I'm interested as to the policy point, which you may or may not be able to do. Does this not reward taxpayers that have been more aggressive than others? I mean, I have been to a number of...
Just wondering whether...
Sorry, Peter, if you repeat the question.
Okay.
The Commission has made it quite clear of claims made in accordance with this framework, good governance practice. And you've got a situation that law's uncertain, unclear, taxpayers have lodged positions based on this unclear, uncertain law, and now we have a policy that's going to, in effect, reward those taxpayers. And other taxpayers who have been more cautious, likely, are not going to be able to, reflect those positions.
Look, the question, for those who didn't catch it, is essentially whether or not this approach rewards bad people and punishes good ones.
No, I think that reads too much
That's too
into
much.
what I said.
Okay.
But, yeah, it's just that there are different approaches to tax planning and governance framework within corporations. And we had situations where I was presented with a situation, should we, shouldn't we? And I said, well, this law's unclear. We have a framework. No, there's no way we could lodge a tax return on that. And, wow, there you go.
I'll say two things, I think, in response to that. The first one is that government was certainly aware of the difficulties that they faced in any particular course of action in making retrospective changes. And they weighed all of these arguments. And I know that there was, anyone who was involved in the consultative process will be aware that there was quite, shall we say, vigorous and, what's the word, frank discussion of these points. So they did they weighed the various elements, and they had various options in front of them, and they chose to do what they chose to do. So I wouldn't wish to say more about the policy than that, but I will make one other observation, though. That is that the protection that is afforded by both the limitation of the Commissioner to the normal statutory period doesn't extend to fraud or evasion. So that the worst category of case, that is to say the person who's made a completely bogus claim that has no foundation at all, is still exposed to the usual audit processes no matter what. But apart from that, it really is just a question of, shall we say, arriving at an appropriate balance, and it wouldn't be right for me to comment on whether the balance that was arrived at was anything other than the correct one.
Could I just add a few general comments, and then we can take some other questions. Firstly, it says it's on. Hello?
Yeah, it's working.
It's working, but it's not working very much. Firstly, I think that as far as we go forward here, I mean, we are in the case of unscrambling the omelette, and that's where we're up to, and it's going to be difficult. I think as far as the tax profession is concerned, I think our focus now immediately turns to the drafting of the amending legislation. Those who were of us, a limited number, were part of this consultation process, confidential confrontation might have been also appropriate, with the Assistant Treasurer, worked as much as we could to get clarity in the document that came out. It's not ideal, not the way I would have written it, but it is clearer than some of the earlier versions we got. But I think that as we go forward, and hopefully we'll have exposure draft legislation in I don't know, let's say February, hopefully, it's up to other people. Let's spread that workload and try and get this nailed this time. All this stuff about, the telephone contracts, is it in Category 2 or is it in Category 3? Let's not beat around the bush. Let's have that out now through this process and get it nailed. I think we all want to move on with life, and I think our clients want some certainty on these things go forward. Good news or bad news. So I think it's up to us now, and I'm saying the broader tax profession, just not the few people involved in that consultation. Spread it out. You've all got thoughts. You'll see that exposure draft. Make sure that you can walk away from that law with clarity about your situation. That's up to us. Now, the second bit is up to the tax office, and that is in working collaboratively on this sort of thing to provide some clarity. It's great that Peter's here today and been able to provide this document here, which is basically, I've seen earlier versions of it, I haven't seen this version, but it's basically, hey, if you, come forward in a reasonable time frame, there'll be no interest or penalties on amended assessments. That's the start. But we also had that in the next few days there was to be a Consolidation NTLG meeting, which has now been postponed because the tax office felt restricted from being able to discuss some of these issues in the formulation of the law, given some existing practice statements. And they were following a long-standing practice statement, 2004/6, which says can't talk about pending law. That, it's interesting to know that in 2000 there was a practice statement which was withdrawn in 2004, and that 2000 practice statement dealt with the Ralph report recommendations and said, hey, let's all talk about these things. We can't give you binding advice, but we can give you indicative advice on the legislation that's formulating so that we all get to work out what's going on. It's a pity that the tax office hasn't opened up a little bit more, gone back to that 2000 approach to open up the discussion around some specific cases as well as the general, so that we, again, focusing on not only what legislation comes through, that's nailed, but also the tax office has got a better idea of what products it needs to deliver after it. So that's the consultation process. And then some of the things that need to be dealt with by way of tax office rulings. I think the easiest way to do that was I went back and had a look at the NTLG submissions that the externals made to the Consolidation NTLG back in July last year about areas that we wanted some clarification on the ATO's approach in relation to what's now called the transitional period. And given that most of those transitional period issues are still alive for that transitional period, and for people who joined during that transitional period, though that law continues on into the future, it's not subject to the tail restrictions, it has ongoing application. So, I've got down 6 of those, which we can talk about later if you like, but there are 6 that are on the public record the tax profession have put to the tax office. Peter fielded some of those issues at a meeting in Sydney last December, a specially convened NTLG Consolidation Subcommittee meeting, so the tax office is aware of those. A couple of those we might be able to dispense with, but the rest of those are still very valid. They're on the plate. The tax office has already done some work on it, and that could be worked out. And then finally, as a sort of a final comment as to how to do that, again, when consolidations first came in not long after, there was a whole host of things that need to be sorted out in a reasonably short time frame, and the NTLG took the approach of breaking up some real working groups on each of those issues, collaboratively trying to nail them and to get something out at a reasonable time frame, and that worked pretty well. So I'd hope that we can get back to that and not just go to the normal 6 months time frame of lobbing grenades over the trenches at each other. Just really all get in a room and a whiteboard and try and work some of these things out pretty quickly so the tax office got a head start on issuing some of this stuff, because we all want to move on with life, okay? And let's try and bed this down in a reasonable time frame.
Well, I don't disagree with any of that, other than the fact that the Commission's not going to change its practice statement. But we certainly want to get this moving. As I said earlier, the first priority, and here I agree with Ken, is making sure the legislation is clear. The more clarity that can be built into that, the better for everybody. And the second is indeed, as you say, dealing with the hangover law rather, and the last category, I'm afraid, will be the new law, the purely prospective law. And if I might just add one more comment to that, in the circumstances of these kinds of discussions, it's quite important for everybody to think about and expose clearly the fallout that any particular stance has. In other words, I know everybody is concerned about the interests of a particular client that they represent, but the fact of the matter is that you're likely to end up representing another client some other time. So if you don't, who with a somewhat different set of interests, so if you don't judiciously expose all of the consequences of a particular approach, you often end up with interpretations which don't work as well as everybody thought they would work. So that is particularly important. There has to be candour and there has to be what I would describe as systemic thinking in regard to the way in which we approach these measures. Indeed, one of the great problems the single biggest problem of consolidation is simply grappling how any particular position that is adopted, whether it's taken in the law or as a matter of interpretation, will fall out in regards to other taxpayers in other factual scenarios. Now, we're using up question time though. Has people got practical questions that they want to put? They're being very quiet.
Hi Peter, it's Colin Jones. A number of presenters and of course the announcements came out highlighting the importance of a private binding ruling that was issued by March 11. I guess I was just wondering if I can get your comments on either a situation where a taxpayer has seen a published private ruling on the ATO website and then has either sought a private ruling subsequently which is not issued in time, or decided that pretty well you're on all fours with the facts that arose for the taxpayer who did seek the private binding ruling as to what they should do now, if anything.
Well, I presume this would be on the basis... we're talking about the transitional period or the retrospective period?
Either the private binding ruling applies to all.
Okay, well, the obvious question is what will their position be under the new law? I mean, if it's the same under the new law and the old law, and it's possible, I don't need to do anything. But if they've taken a position that isn't sustainable under the new law, then that position needs to be corrected, because the decision by government was that they were going to afford protection to a very limited class of people, and if you're not in that class, then you don't get it.
Make a few comments about some of the things in relation to which ATO guidance would be worthwhile. And let's start.
Do you want to stand, Ken?
Sorry?
Do you want the podium?
I'm okay here. People can hear me, and because you're the one people really want to hear. So that's firstly the business acquisition approach, and Aldrin's really run through that very well and given some real direction there. I think that given that right to future incomes, other than WIP, basically get a zero retained cost base asset status, really takes quite a bit of heat out of it. But then, the John Smith type case, where it was an in the money coal derivative, is more in the context of not a right to future income, but just a revenue type asset. Well, it was the actual amount paid for it was capital. Didn't say what would happen on the closeout of that contract. So even in a lot of circumstances like that, there are going to be profit emerging closing out issues. Which will come into play even on a business acquisition. So I'll just, before perhaps Peter might like to comment on that, there's also 2595, which is a pretty little obscure little section dealing with work in progress, which is now like big time. I mean, it's really a very important little section. If you haven't already brought it out and highlighted it, you will pretty quickly. And it uses the description of work. Wonder what work is. Does that include services? Do you think that a lot of the right to future income type categories are regarded as work, where it's a service? So that needs to be sort of thought through. And it also includes a concept where the entity agrees to pay an amount to another entity. So it's this concept of paying an amount. Does that cover sort of trailing commissions, or where there's a formula to determine the amount derived? It's not a specific amount. So there's just in that right to future income. In the go forward period, there's some quite clear things that are already on the table. Firstly, just with 2595, which the Commissioner could probably issue rulings on now, because we're told that legislation's sort of going to apply more broadly. And then there's the business acquisition approach. So I don't know whether Peter's got any comments on those.
Yeah, I've got a few, Ken. The first thing is that we do have some preliminary thoughts on these, but I know this is going to be one of those areas where people will have lots of views. So I always need to issue a warning that Commissioner's preliminary thoughts quite frequently aren't his final thoughts, especially where taxpayers vigorously contest them. So that's my opening warning. Now, on the business acquisition approach, Hill, in some case, I can't remember, said, and we would agree, that pretty much nothing is deductible straight away. But exactly what you said, Ken, that the question will arise whether or not net profit or loss on the disposal of a particular asset is on revenue account. There's probably going to be, some fairly vigorous argument here about boundaries and questions of purpose. Under the new rules, it will be the position of the acquiring consolidated group and not the joining entity which will matter. The question will be usually whether or not the relevant asset has been acquired by the joining entity with the purpose of making a profit in the course of business. In other words, there's the usual sorts of tests. What will make it interesting is, of course, there isn't actually an acquisition of that asset by the head entity. So we're going to be in the realm of notional purposes. So this is why I'm not exactly sure how that's going to work out. One of the points that is often forgotten here is that we're operating by way of analogy. When matters actually end up being fought out in court, there won't be a director available to say, these were my purposes in acquiring this asset. All they can actually testify to is the purposes they had in acquiring the shares in the joining entity, and then we're going to have to make some appropriate analogies there. So I can see that that's going to be an area for argument. But our starting position will be, though, that with rare exceptions, the expenditure that you incur to acquire a business as a going concern is on capital account. It won't itself be an outright deduction. I know that there will be people contending for exceptions, but that will be the starting position, and we expect most of the action to be on this revenue asset side. On 2590, for work and services, our inclination is to take a fairly straightforward view of what we find in the authorities. One of the big questions, for example, which I think will be addressed directly in the legislation, so I think I can safely use it, is whether or not insurance is a service, and the authorities would seem to suggest not, so that services does seem to connote a slightly narrower category than the sort of economist notion of the service industry. But on the other hand, it would seem to be not right to say that it must be physical services. That would seem to be far too narrow. And I haven't really directed a lot of thought to what it means by work, but presumably it means some kind of activity rather than, for example, the mere entering into of a contract. So I suspect that the critical question here will be that you won't be able to get yourself within the expression work or services merely by promising to do something. It'll be very much what it is that you've promised to do.
When this originally came up in the drafting of 70190, I used the example of work was blue collar sort of functions, and services are probably white collar type functions. And when you get to a telephone contract, for example, or a computer use of a computer facility, is that work or is that services? They're the sorts of things. It's a pity that hopefully through this process that section might be extended out to be work and services to make it more contemporary with the world in which we live in, rather than sticking to this blue collar type concept.
Reasonable questions, although I must comment that any really big ones can, and I'm sure you would agree with this, you would prefer to be addressed directly in the legislative process so that we can only just do clean-up. I don't have any views on paying an amount at the moment, other than there's probably just literally paying an amount.
But there are 6 other issues which are logged with the NTLG about the transitional period, and quite detailed papers are put in by the various professional bodies, and those, with possible one exception, are still live, and they're on the agenda. Really, they're ones we had, and they should be dealt with. So.
Well, if Tony is one, I'm going to end up with a final comment here. Just to supplement what Ken said, the assumptions that the ATO doesn't know what actually matters in practice, so you need to tell us. So we get things put to us by the NTLG, but if the NTLG itself hasn't had it put to them, then they don't put it to us. So we certainly encourage everybody to bring forth their problems and to bring it out as soon as possible. And they don't have to if I make this perfectly clear, you don't actually have to be at the position where you need the answer for your client. All you have to do at this stage is just say, this is the sort of thing I suspect that my clients might need to be dealing with, because the earlier all of this is put on the table, the more complete and faster our response will be. Anyway, just one thing to say.
Can I just ask a question, just amplifying that, and thank you very much for your openness, and I think we're very pleased to have you participating in this process. As you noted, taxpayer queries will help to inform the legislative development process that the Tax Office plays a role in, and will help us all to get better law. What would you see as the preferred process for getting the curly questions to you? You might want to think about having that on your website, or do you want lots of people emailing you? Or
perhaps I should have said we haven't. We've got a few things to do at the moment within the ATO. This matter is being coordinated by Scott Burrows in our large business area, and in regards to liaisons with external bodies by Mike Slattery. So those two people are the appropriate entry points. But if you just default directly to anybody else who's involved in it, they will make sure that information is passed back through it. It is better if it goes through the professional bodies, but we're very happy to receive direct contact as well.